Today is Friday, May 6th. Here's a serious one for you. It's National Nurses Day. So let's pay some respect to these people. Let's take a look at what's going on right after the jobs report. Pretty lousy report. Very weak growth, although some will argue positive is positive, but it's well below expectation. And the markets reacted right away. You can see here, this is the SPY, the S&P, the ETF. This is a 30-minute chart, and it's just barely 30 minutes into the morning session right now. And you can see big opening, gap down opening. I have it in candle format to make it a little clearer. You can see it came way back. It was actually above yesterday's close for a bit, and then came back. We'll see what happened here. If we go into smaller time slices, this is a 15-minute. You can see the first 15 minutes are strong, and then the second 15 minutes not so strong. We could even drill down a little bit tighter, 10 minutes. So you can see that the market really lost its mojo, but it started pretty poor. I call that a trapdoor opening, where it gaps down, hits its low, usually for the day. I don't know if I'm going to say that today, and then comes roaring back to trap all these people who decided to sell on what supposedly was bad news. So we'll see what happens there, but right now we have a market that faked out the bears to begin with, and now it appears to be faking out the bulls. So again, we got to see what's going on here as the day progresses, because it's still all knee-jerk stuff. Okay, I'm going back to a 30-minute chart because I want to look at bonds, look at the long ETF, Treasury bond ETF. This thing tanked early on and came back. So again, we'll just zoom in a little tighter, 10-minute bar. You can see big sell-off right at the open, right after the news actually in the pre-market. And now it's maybe stabilizing, but unlike stocks, it's not coming back to where it was. So this still appears to be weak, which is why I'm not really not so sure that we had a trapdoor opening in stocks that's going to stick. But again, you can't make a judgment on the day based on the first 10 minutes or 30 minutes. All right, let's keep going on. We'll look at the dollar index. Whoops, my mistake. Put that into a daily bar. All right, so we had this major support break a couple days ago, and it came back. You can see a bullish hammer candle in there, or a bullish reversal bar if using Western bars. And it came back above the former support level. But is that a breakdown failure? I don't think so. I think it's still feeling its way. You can see this trend line still intact to the downside. So again, it's really a wait and see. So we have bad economic news. The markets react predictably. Stocks sell off. Bonds rally hard. Interest rates drop seriously. The dollar, well, initially it was weak, and it's come back again. So you have up and down. You don't have a real solid signal. Every day seems to be like this, where things are supposed to happen, they don't. And then after you get used to them not happening, then they do happen. So it's a very shaky market, very jumpy. I wouldn't be making big positions in any direction right now. So there you have it. We're about 32 minutes into the session right now, and it's a lot of uncertainty. And uncertainty is not a good thing, so if you want to take it that way, that would be one option.